The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 22nd. Almost said 23rd, but the October 22nd, magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, always be, pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us. Not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, well, let those fingers do the walking. You can always send me an email, steve@tfnn.com, inside the subject heading, if you would be kind enough to put the radio show question like Scott did here and AGM did as well. Just makes it easier. Just shows up right on my phone. Boom. I know that you sent in a request, of course, in the Tiger's Den. Well, any ping will do, just like Mr. Z did. So we've got three things up. First, let's go ahead and get this show started on Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Dow trading down 101 points right now. It's off about 0.4%. 25,344 is the print. S&P's off 4. NASDAQ 100 up 61. Russell is slightly green. Semis are up 7 or about 0.6%. Trannies are up. The NASDAQ Composite is up. The New York Stock Exchange is down. The Wilshire is down. The spot volatility index is down. Gold is down $4. Silver's off 7 pennies. Light sweet crude 20 cents to the downside. Two of the downside out there. Let's reverse it. You've got Tilray off $21. Restoration Hardware down 7% or 9. Mirata Therapeutics off 7. GW Pharma down 7. Coherent is incoherent. It's off 5% or $7. To the upside, Booking Holdings up $43, 2.5%. Amazon is up 28. American Railcar up 23. Boston Beer, Sam Adams up $13 or 5%. So we do have some things that are moving and grooving. The first moving and grooving that we want to take a look at was for Scott. And there we go, open up. Scott wanted to take a look at PYX. PYX is Pyxis International. I don't know what Pyxis International does, but let's continue reading Scott's question. Looking for a long position. It appears to be filling a gap. Can you give me some price targets for entry? DCI, I am short by November 50. Does 50 look reasonable? There we go. So this is a twofer. We got PPX and DCI. So PPI, as I said, PYX. I'll get it right. Don't worry, folks. PYX. If we take a look at it, the gap that Scott is referring to, and he is right about that. Let's go ahead and use a yellow line out there, yellow horizontal line. Here, in essence, is the gap. That was from the trading session. From the close, we're looking at a daily time frame chart, by the way. The close of October 5th, that high was 29.24. The open of the next session was up at 30.76. Trade as low as 30.12. Creates a gap out there. That gap was with volume, 10.9 million shares. This would be a perfect art of timing the trade type of trade out there because price has pulled back with lighter volume. Today, for example, 759,000 shares. And you actually have a high volume high that has not been tested. So Scott asks, we can see while you are taking a look at Pyxis International. Now, you'd like to see this close above. Now, this is also testing the bottom of its daily profile, 28.73. So if you're asking a question, should you get in it to win it? It's a candidate. That is for sure. If we take a look at its average true range out here is $5.52. So your stop is going to have to be $5.52 times some type of Fibonacci expansion. I would say in a volatile market like the one we are in, 1.618. You multiply 550 times 1.618. You figure out how much you're going to risk. Well, that's easy. It's 1% of your trading capital. If it's $10,000, 1% is $100. Take 100, divide it by that stop. I don't know what that comes out to, $7-8, and that is how many shares you would buy. And you'd have everything in place. Your target becomes that high volume high. Your stop, you've already calculated that. If this closes below 28.73, well, then this is going to pull back even farther. To where? Well, the problem is, and this is a slight problem out here, is just take a look at this monthly candle out here and take a look at what it's done. So if this were to move lower, Scott, and what I mean by look what it's done, it's trading. Month is not over. Doesn't end till next Tuesday or Wednesday, I believe. But it is back inside its monthly profile out here. I don't know if that's good or bad. It's not good. Okay, so I do know that it's not good. And says if this doesn't close over 30.70, sheesh, this thing could be consolidating and pull all the way back to 2052 or 1645. Is it pulling back into that gap with light volume? Absolutely. Does it have daily support? Absolutely. So that's your trade setup. Should you go for it out there? I don't know what Pixis does, whether they make any money or anything along those lines out there. Your second question was, oh man, there we go. DCI is the question, or is the stock. The question was, can this thing get to 50? It's at 52.17. And the answer is going to be, yeah. Just looking at this chart, we don't see any reason why it can't get to 50. It's below the daily profile, below the weekly profile, and the top of the monthly is 50.28. So, yeah, now this thing, too, is pulling back into where it broke out with accelerated volume, which was September the 6th. So, September the 6th, some one or some ones, which would be 14.25 million shares, 1.4 million shares, I should say, which was big volume for this equity. And the price level there was at 50.69. So, yeah, it can pull back. You're at 52.21. You're kind of pulling back into light volume. So I guess to be consistent with what you just had me take a look at with regard to PYX, and you're short this thing, you're short coming into this little sign of strength out here. So is it worth? I don't know if you're in the money. You're not in the money, but I'd have to say even the swing point that it's testing from October 12th, which was the most recent low, you're testing that today with, well, so far today, 284,000 going against 618. So the selling looks to me, Scott, like it is drying up inside of Donaldson Inc. AGM wanted to take a look at the IWM, and the AGM, with regard to the IWM, we're going to look at the Russell 2000 when we get back from this small breakout here. So we're going to do that. Then Mr. Z wanted to go take a look at the ES Mini on multiple time frames. So we'll go ahead and do our bisecting there. And anything else that you'd like. Callers, hey, we get first seating. Call ahead seating, 877-927-66. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So one of our listeners knows how to get right in the front of the line, that call ahead seating. That's Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Great, Steve. Appreciate you taking the call.
My pleasure. Nice to hear from you.
I wanted to ask you about Lockheed Martin.
Yes.
They're bringing their earnings out tomorrow morning, and one analyst says their earnings are going to be up about 35%, revenues up about 8%. I just wondered, what do you think of a short-term play?
So if we take a look at Lockheed Martin, LMT, folks, is the ticker symbol. And as we take a look at this chart, it was an ideal set of patterns up at the high. And that's where we want to start, Ron. And so it did two things. It made an A to B equals CD to the upside. So what we like to refer to as a sell the D point. The price target was 349.52. As price was hitting that area on the trading day of October the 3rd, you get a nice little bullish engulfing candle, Rhodes momentum indicator top, and now price has pulled back. So we know that it made nice top. Now that A to B equals CD pattern out there has basically three different areas to retrace back to. Price is below its daily market profile, so that's not going to help you or I at this stage. And what we can see is that price is sitting right around that 0.382 retracement level. Now, the last time that price was down here was just a handful of days ago on October 12th, and price was pulling back with about 1.3 million shares. We're halfway into the trading session. We're at 700,000 shares, so it's similar volume. It's not like the selling has dried up here. If this does break below the low of October 12th, then what this would do is this would have an A to B equals CD to the downside. I don't have any indication yet whether it's going to do that or not. It's trading into that swing point with light volume, or with similar volume, so it may. And if it were, then what this would do is this would probably pull back into the 308.65, 304.32 area would be the likely outcome. That would be for Marietta. So that's what the daily time frame chart is telling you and I. If we go look at the weekly time frame, This says that it has some strong support at the bottom of its market profile, which is only a few dollars away. It's at 320.44. We're trading at 326.94. And other than that, I don't have a ton of information. What is it that you're inclined to do? You know, as you've taken a look at the analysts, what is the trade that you're looking to possibly put on here?
I was thinking if the earnings come out well, since the stock has pulled back so much, that maybe it would jump up $3 or $4. If earnings come back, you know, they do the F-35. If earnings come in and they're up 35%, that should bring in some buying. But, you know, that's on a fundamental basis. I don't know.
Sure. So I would, as I look at this chart, and we just take a look at it on a daily time frame, knowing that it's only done a 0.382 retracement, I wouldn't say that it's really pulled back that significantly. It may seem like it from a high of 351 and you're trading at 327, so $25, and you're just looking for $3 out of that. So yeah, I can see that, but it hasn't really pulled back significantly. I don't have a clear diagnosis, I would say, of Lockheed Martin, and it's almost similar to the way that the market is trading right now. I can make for you the bearish case, and I can make for you the bullish case, and both are very valid cases out there. So it's kind of like maybe it's one of these markets or one of these time frames where, because we don't have a clear direction, that it's better to just keep your powder dry. I mean, I've given you my best take on Lockheed Martin, but even with that, I'm inclined to say, Stevie says, I'm not sure where this thing is headed to.
Appreciate it very, very much. Thank you.
Okay.
Thank you, sir.
You bet. That was Ronnie in Denver. And so to a certain extent, let's try to go make those bullish and bearish cases out here, right? We had AGM who wanted to take a look at the Russell 2000. And so I'm going to give you the bearish case that could turn into the bullish case, and it could do it pretty quickly. What? I know somebody was saying that, but let's go take a look at that for AGM out there, and probably a few others. Now, let's change this from the NDX to the, although I want to come back, let me do this on the NDX, all right? What you're looking at here, and we could do this on the NASDAQ Composite too, it doesn't matter which one, but since the NDX is one that you can actually trade, it's why I spend more time with this than the larger NASDAQ, okay? But what I want you, Ron, too, I want you and everybody else to pay attention to. Here comes the so-called bearish case. It would flip to the bullish case if X happens. What is X? Stevie's red line. You and I talk about Stevie's red line and the importance of that. It's red or green, the different colors out there. Just let us know whether the price oscillator is above zero or below zero. Just use the simplicity of it. When the price oscillator is above zero and price is above Stevie's green or red line, the outcome is bullish. Any pullbacks are nothing more than a test of support. When the line is red, the price oscillator is below zero, and when price is below it, it says you've got a falling price oscillator below zero. It's not good. It's not bullish. It could only be bullish if there's some kind of bottom signal out there. Now, inside the NDX, there is a bottom signal on the 5-hour time frame chart for the NQ. Confusing? Not trying to be confusing, just trying to truly give you the full scoop out here. The thing is, Ron, AGM, everybody else, what we can see that's taken place yesterday, Friday, and on Thursday, and even on Wednesday, was price was testing Stevie's red line, rejected it, closed underneath it. That is not a bullish outcome. If so this jostling back and forth, up 200, down 200, you know, within hours or what have you. The only thing you've got to focus on, or should focus on, because if the NDX is going to lead us out of here, then its price is going to close over Stevie's red line, 7208.65. So give it a little bit of, you know, that number is going to go up and down. Right now, you can see it's 7207.95. I mean, it changes. So around the 7208 area. Now to the Russell 2000. How do we put these two things together? What's the outcome right here, right now, on a daily basis? It's bearish. That's it. I mean, it's directionally speaking, Okay, and it made one of those Rhodes momentum indicator tops out there. It's clear, it's evidence. We don't have to make up anything. Now let's go take a look at the thing that's gotten the you-know-what kicked out of it, the Russell 2000. And now what you're seeing out here is you're seeing a Rhodes momentum indicator bottom signal for the index that has gotten the you-know-what, the feathers kicked out of it. Yep, tarred and feathered. Now, AGM. You can see that Friday's candle, fairly wide-ranging bar, it would take quite a move higher today to get the required bullish reversal candle. You can get it. Just needs to close up right around the high of today or a little bit higher to get that bullish piercing candle. Here, price would need to close above Stevie's red line, too. You can see how it has acted as resistance over the last 2 of 4 trading sessions out here. The number there, 1568.60. But this is key. Right now, at 126, this is giving us a bottom signal. No, it does not say go buy it, but it's telling us to be prepared. Now, if the Russell 2000 generates that bottom signal and confirms it, and the index closes over the profile, the Stevie's red line, what do you think that means? We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. And so just to finish off that thought there, we're taking a look at the Russell 2000. And I guess the point that I was going to make is that in order to generate a bullish reversal candle today, probably slightly difficult. Your preference, maybe it's not your preference, especially if you're long the Russell 2000, is to see slightly lower move. Even a doji candle would work, like we've got one right now, because then you could get that bullish reversal candle more easily, even though that's probably just, yeah, I'd get flunked out of grammar school to say that. But that's really, in essence, what you'd be looking at. You do want to focus on this, and this pattern isn't valid yet because it hasn't been confirmed, but it could be a leading signal. And I'd say this and the NDX or the NASDAQ composite, which you and I already took a look at, probably is what delivers the message to us. Now, there was a question about the ES Mini, if we could go take a look at it on multiple time frames, so let's do that. With regard to the ES Mini out here, if we just start with the big picture, the bigger picture, the weekly picture, because we can do that. And if we start with the weekly picture, still trading right at about support. What is support out here? Support out here is that little red dash line. That is the low from a weekly basis of the candle session from July 13th, 2018. That is a Tom the Mark setup trend line, that little red dash line. The level is 27.61 and 3 ticks out here. We're trading at 27.60, 27.59.50. So, you know, it's basically right on the support area. If that fails, where does price head to? Well, you know, what price heads to at this stage here, the prior swing point is June 29th. It has to break below that. If it breaks below that, closes below that, which is 26.93, then it opens up the door for the April 6th swing point. That is what the weekly chart shows you. What does a daily chart show you? The daily chart shows us the following. One, price is trading below Stevie's red line and within inside a set of profiles out here. The top is 28.13, Stevie's red line 28.04. We're trading in between the box. So there's a lower level consolidation between 27.32 and 28.13 out here. That's what it shows. No other significant that I can see on a daily time frame. We've got, that's your so-called range out here. Again, the red line, the oscillator and change line 28.05 is important, but since it's so close to the top of the profile, 28.13, we'll give the top of the profile a special billing out here. If we take a look at the 5-hour time frame for the ES Mini, this is stepping things back a bit. What is it telling us? Well, it tells us that it formed a bottom back at about 5 o'clock in the, well, really, we've got to say it did that at about 11 o'clock at night on October 11th, when it confirmed that Rhodes momentum indicator bottom out here. That's what the 5-hour time frame chart shows us. We're trading into that candle session from back on October the 11th out here. That's a doable thing. It's not the greatest looking pattern, but it doesn't violate or void out the bottom signal pattern out there. Is that important? That 5-hour time frame has that bottom signal? Well, I think that it is. Why do I think that it is? Well, this is going off the ranch here, but I like to go off the ranch. If you stay on the ranch, all you're going to eat is ranch food. You can't do that. Why is that important? Well, if you just take a look at this time frame chart out here, you're going to see all kinds of Rhodes momentum indicator bottoms on the 5-hour time frame. If I put up the ES like this, you would see the same kind of thing out here. So, yeah, it is worth noting what's going on that 5-hour energy drink time frame. If we step the ES Mini back to the 2-hour time frame, 120 minutes, you're going to see that at about 2,200 hours last night, when the ES Mini bottomed, or hit its low, at least thus far, it was also doing it with another Rhodes momentum indicator bottom signal. So these signals, which appeared on the 5-hour, also on the 2-hour out here, if things are going to get bearish, those things are, directionally speaking, are going to get taken out. But what you have here is we can clearly see where the bulls are trying to take their position inside the market, using multiple time frames out there. If I look at a 60-minute time frame out here, well, we're going to see it too, even most recently this morning, trying to form that Rhodes momentum indicator bottom. So we've got bullish signals, we've got bearish signals, and I don't know which way the market is going to resolve itself. In summary, the ES Mini is trading with inside its daily profiles. Support is at 27.32. Resistance is at 28.13. The same thing with inside the NQ, trading inside profiles. The same thing inside the Dow. And the Russell 2000 is trying to form a bottom. That's what Stevie knows at 1:35 in the afternoon. I also know that we've got a caller on the line. And so our call ahead seating says we're going to Jupiter I like that. And speak with Bill. Bill, thanks for calling. Thanks for holding. How are you today?
Good, Steve. How are you? And by the way, this is Jupiter on the planet Earth, not Jupiter out in the.
Well,
anyway,
I'm disappointed because you were going to be our first caller from Jupiter, But we will settle for Jupiter, Florida, because that is a great place to live. Have you been there for a long time?
I have. We've been here. Well, I've been in Florida 30 years. Been in Jupiter a little over 10. Yes, great place. Yeah. We love it.
Yeah, that is a great place. So you want to take a look at gold on your planet Jupiter. Tell us what you're doing, how we can help you.
Well, I know that you kind of specialize in gold, so I just wanted to get sort of your take on gold. And by the way, your analysis on the indices is exactly. I'm trading a mechanical system, not doing well today because we don't have any direction and we'll get pretty choppy. So yeah, your analysis is spot on. So I'd like to just hear your analysis on gold if I could, and then I'll send you an email afterwards, and maybe we can connect later on.
Sure. My analysis on gold, my analysis on pretty much any commodity is it's really all about first trying to identify where the natural buyers and sellers are. And the way that we do that, or the way that I do that, is take a look at gold expressed in both euros, yen, I say both, really, expressed in euros, yen, Great British pounds, and U.S. dollars. And that's a screen that is up on my, that's what's on my screen right now. And in order for gold to have a huge run to the upside, the traders in those currencies need to see gold having momentum, breaking out above resistance, above prior swing points, things of that sort. And it looks fairly good right now with regard to gold priced in euros. We kind of have that little V-shaped bottom. Gold priced in yen, has shown us that there was a significant bottom way back in the trading day of August the 16th. In gold expressed in pounds, yeah, it looks pretty good. Looks, pretty good out here. So if it's going to be good in breakout, then we can come back and take a look at gold priced in dollars, Bill. And it doesn't get much easier than this. If we utilize the support or resistance levels of our TAS market profiles, the weekly resistance level is 1233.80. But we got a brand new box a few days ago, which is 1236.90. If gold closes over 1236.90, and is continuing to move up inside of euros, yen, and pounds, there's nothing to hold it back from actually making a move all the way back to the highs in the middle of June in the 1320 level. Of course, we have to take this one step at a time, but that says another $100 to the north would be very possible. So that's what I see right now. We're about to go to a hard break. If you've got another question, just hang on, and we'll go back to you when we get back from this break.
Terrific.
All righty. Well, so we'll be back with Bill and Jupiter taking a look at gold. Of course, the better investment, if gold's moving higher, are the miners. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, Forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now, before we go back out to Bill and Jupiter, I just want to clarify one thing that I said, which is that, hey, if gold is made a bottom, the better investment would be the mining sector. And the chart, Bill, that's on my screen, if you're catching this, shows the reason why. When gold does form a bottom and it does move higher, the rate of change inside the mining equities outperforms anywhere from 2 or 3 to 5-fold to 1. And if we take a look at the bottom that recently formed in gold, which would be 46 days ago, and I just apply my rate of change tool, what we can see is gold's had a rate of change of about 3.5%, whereas the XAU is up in the 10.5% range, and the HUI is 10.5%, and the XAU is about 7.5%. So that's my analysis on gold. But what questions does that pose for you?
Several, Steve. So I heard you say TAS, so you are using TAS as one of your tools.
Yes.
And your time frame, Steve, do you do intraday trades? Are you more of a swing trader? What is your trading style?
So my trading style is based upon different accounts out there. So some are long-term and some are shorter-term. So it just really depends. And inside the newsletter, it's not intraday trading, other than I provide the TAS market profiles for multiple instruments so that clients that do intraday trading understand where there's support and resistance.
Okay. Very good.
Yeah.
I appreciate the information. I will send you an email and look forward to connecting.
Okay, that sounds great. Thanks for calling. That was Bill in Jupiter, Florida. Let's go to a question that came in here from Eddie. Eddie says, it seems like the markets keep testing October 11th. So let's go back to our main page out here. Testing with lighter volume, at least on the NASDAQ composite. Do you agree? Join your newsletter last week. Thanks, Eddie. So for volume, I don't really have the volume makeup to go into the NASDAQ composite on this system here. But if we look at the Qs as an example, so why don't we use that just as a volume matrix here? And you're talking about testing the October 11th level out here. And let me add the volume. I believe that was a high volume bar, which, by the way, the NASDAQ makes, it's the NQs, or the NASDAQ 100, I should say, or the QQQ series makes bottoms with high volume. It just does. Go back and test it. You'll see for yourself. Now, the volume there was 143 million shares. So we've only seen, 3 tests over the last 3 trading sessions. Let's put a yellow line across there so you can see that. Now, today might be the only day where we've seen a rejection. So, Eddie, when price pulls back into a swing point, and what you've identified is October 11th for the QQQ series, the top of which is 173.40. We can see the volume there, 143 million shares. When you close inside that swing point, albeit with light volume, for example, 82 million shares on October 18th, it's not a rejection. It says you can still go test the low. The very next day, which was Friday, another 82 million shares, so two 82 million share days out there, but still a close below 173.40, says, hey, you still game. No rejection out here. So the question is, today, does the QQQ series ETF reject that swing point of October 11th? It means close above 173.40 and do it with less than 143 million shares. Looks like the answer is going to be yes on the volume. We don't know on the price. But if it did close above 173.40, today, by the way, there's 35 million shares, so it's not likely to be more than 70 million share day out there, if that, which is lighter volume than Friday and Thursday, then you'd have a rejection. Now, the problem is, potential problem, is that your swing point, your target to the upside is October the 17th. And like what you and I did, in essence, was we took a look at the Russell 2000. We took a look at the NDX 100. Let me give you Stevie's red line on the QQQ series ETF. Until price closes over it, which is 175.97, give or take, because I don't think this is updated for today's action. But the price has got to close over Stevie's red line. Otherwise, it's just which is 175.55. So we've got the number in here. And that's going to change just a tad. Price must close over that. Now, if it closes over that, that says you're going after that swing point. But more importantly, that swing point, again, by the way, would be that trading session from October 17th. But if the Qs can close above it, then what you might have is an A to B equals CD to the upside. That which could turn, quite frankly, into a Gartley sell pattern. That A to B equals CD would get you up into 182.84 based upon the information that's available to us today. So I think, like we spoke earlier, right now with regard to the Qs, yeah, you're testing a swing point with light volume. But what the Qs haven't done, the NDX 100 hasn't done, is been able to close above resistance. We'll use Stevie's red line as the key resistance level. And until then, it's anyone's guess as to what the next move is. Yes, bottom signals, like we looked at on the 5-hour time frame chart for the NQ, that says we've got a bottom. But am I convinced? I was more convinced a few days ago than I am today. It's just that way. Sometimes the markets, you just got to take what they give you. And when they're kind of give you confusing signals, it's okay to be confused, because you know what that means. It means we're just about to learn something. Let's go take a look at what Jack wants to take a look at, which is Vicor Corp. VICR is a ticker symbol. So if we take a look at this on our 3 time frames out here, you're looking for a possible entry point. So let's take a look at VICR, and what we can see is, what you have today out here is you have potentially a hammer candle, so that's kind of nice. You had a hammer candle back here on October 15th. So what this tells you, at least, is this is trying to hammer out a bottom. The question is, is there any kind of pattern that you and I can see? Because, we like these candles. We can't just trade on candles alone. You can, but I think you're just going to get crushed. So here's what I would be waiting for. We can see that today, price moved lower, did it with less relative energy. Do you get that bullish reversal candle signal today? Do you get a hammer candle? And if you do, and you can see prices trading above Stevie's red line, then you're onto something. That would, at least on the daily chart, say, okay, I'm in. Now, what else has Vicor done? Well, we can see we kind of piecemeal all this back together with all the questions that came in. This had a sign of strength on April 25th. That sign of strength for this was 1.1 million shares. You're pulling back into it today with 240,000 shares. This had a sign of strength off of the bottom. When this thing gapped up on October 17th with 1.5 million shares. Yes, price came in. It went ahead and closed that gap a couple of days ago. Maybe you do. Maybe if you don't get a bullish reversal candle today, then I say you got to stay put. You got to stay put, Jack, and wait to see if this thing tests that 3305 level. Does that with lighter volume. So you're in the range out here. If we take a look at our TAS profiles on a daily time frame, they're not helping us. So we kind of have to ignore that. The weekly time frame, they're not helping us. And the monthly time frame says 35.77. So, Jack, you might be onto something here. Wait to see what that candle signal is today on Vicor, V-I-C-R. Right now we got the Dow trading down about 129 points, S&P off 11. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last question in here was simply, or not really a question, there was a statement earlier inside the Tiger's Den about the wheat contract. We're taking a look at December at this stage, and the question is this forming a bottom? So we can look at our weekly profiles out here and see that for the last month, last 4 weeks, price has been trading between the range of the bottom of its weekly profile, which is at 508, up to in essence, the top of its daily profile in the 531 level. Right now, we're trading just slightly below the bottom of that weekly box. So is it a candidate for a bottom? Yeah, whenever you get down to support, yes. It's trading below the bottom of the daily profile, the bottom of the 5-hour profile, the bottom perhaps of the 60-minute profile and of the 240. So all that means is prices trading right now down below support. And we just began the week, so we don't know what the week is going to look like. Candidate, yes. Signal, or confirmation based on trading back above support. Not as I see it right now in taking a look at these contracts out here. What else are we going to be taking a look at watching today out here? You know, you've got the spot volatility index still out of whack out here. What do I mean? It's trading right now in 1993. If you take a look at June 2019, that's at 1854. Yeah. So pretty much you've got the spot volatility index, total backwardation above all futures contracts out there. And there's just one meaning, one ping vacillity. And what that means is that the markets are trying to form a bottom. Has it formed a bottom? It's been sloppy. It's been ugly. But that's what they're trying to do. And why are they trying to do that? Well, because 'tis the season. You take a look at what the market typically does around October, and on average it's October 13th over the last 84 years, as it forms a bottom. And that's what it looks like it's doing. Doesn't mean the bottom's in, but soon enough it will be, and then it will be ho, 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 as we prepare for the Santa Claus rally. Thanks so much for being here, folks. Stay tuned. Your favorite polar bear, speaking of ho, 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 he's up next. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what